Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and 10-year note yields. Very unreactive, I think is the best way to put it. We saw equity prices overnight, early morning in the States, drop about 1.5% and then rally right back up as if nothing happened, actually making new highs for the session. So we saw equities with wider ranges, big moves lower on the China tariff debacle, we'll call it. And bonds, really, 10-year yields about 4 basis points of yield, maybe 5. Later in the day, we may have sunk another tick. But right now, you're talking about a very tight range in the bonds. They're not reacting to the story, to the to the rhetoric, to the politics. There is no fear in the market as we saw volatility. Volatility has been remaining very low. It's actually starting to trend lower again, despite the fact that we have not only huge moves in stocks and commodities, not only that we have huge risks out there with potential trade war, not only that we have massive rising geopolitical risk globally, but we've got non-farm payroll and Chairman Powell speaking on Friday. And those are things that typically give the bond market a little bit of volatility, a little bit of, if it's not even fear, it just could be a little angst, something. Show me you're alive. The bond market not showing it right now as yields continue to creep a little bit higher. Week over week, they're creeping a little higher, but not much. And I think as we look at, as we move forward in the bond market, I think right now the big moment is going to come on Friday when Chairman Powell speaks. The curve is going to be the big question. Yes, we have seen a modest steepening of 2s10s. Yes, it's been up for 2 days, or not flattening, I should say. But if you take a step back and look at the charts, it's still way, way down. We are miles away from being safe from a trending trend chart looking at an inversion. So I think right now what could happen on Friday is you could see maybe a little more hawkish talk out of Powell, perhaps something real direct and into the market, talking about the flatness of the curve possibly being mispriced. Therefore, I think you could start to see an elevation of the 2s10s curve, which has been down into decade-long lows, possibly getting us away from that inversion fear. I think that is the real reason why the bond market is unreactive to what's going on in stocks. So right now, the 10-year note yield stuck in that range, waiting for the it moment. Could it be non-farm payroll, or it could be Chairman Powell on Friday? We'll have to wait and see. But right now, we are just still waiting, and bonds very unreactive to what's going on around it. That doesn't usually happen. This is Todd Colvin coming to you from the floor of the CME Group.